Good morning, my name is Sam Hill. I'm a Client Portfolio Manager on npower's Optimisation desk. Here is today's market update for Monday the 17th of October. With the power market reasonably slow to get going, any indications for price movements are coming from the gas market, where contracts that have traded are up on the previous close. This is despite an oversupplied gas system and a pause and slight retreat in oil prices. Continued weakness in the pound provides some upside risk, as well as continued concerns over the supply margins for the winter period. For more information, please get in contact via the email address provided, or please continue to listen. Okay, the UK's gas system is forecasted to end the day just below 27 MCM long. This morning, forecasted demand is below seasonal averages. A reduction in UK interconnector exports and temperature tracking close to seasonal averages may be suppressing some residential LDZ demand. Healthy Norwegian flows through Langled, close to capacity at 70 MCM, are supporting the length in the system, and this is making up for a lack of storage withdrawals and LNG send-outs. Suffolk send-out is currently at 0, which is due to an outage which is expected to end later this morning. Moving on to power, peak power margins for later today are just over 11 gigawatts. Wind generation is over 4 gigawatts and looks steady, however may drop off a touch later today. CCGT generation is close to 19 gigawatts, making up 50% of the stack, and there is some coal-fired power generation, just over 2 gigawatts, which is helping balance the system. Nuclear generation is steady around 8 gigawatts and is only being affected by the one outage which is affecting the Hainsham reactor. This is due to some planned maintenance. The French interconnector continues to be subdued due to maintenance issues and is currently on export mode. The Dutch interconnector is importing at its full capacity, and we also have a small amount of imports coming from the Irish interconnector. Looking at oil prices have continued to slow following an increase in US production as a result of increased drilling. This, coupled with Iran's intentions to boost production by 4 million barrels a day, adds to the supply glut and may put a spanner in the works for OPEC's planned production freeze. Oil is currently trading at $51.63 per barrel. Elsewhere, the pound continues to be dogged by the apprehension over the looming Brexit negotiations. The complex agreements over trade and legislation, with a so-called hard Brexit direction, encouraging uncertainty, drives a retreat in the value of the pound, which is currently valued against the euro at €1.10. Some UK CPI data is due out later tomorrow, which also may lend some direction. Thank you very much for listening. Have a fantastic day, and we'll catch you same time tomorrow.